Streaming. Hey, what's up, guys? Good night. Today is April 27th, 2011. Yeah, it's April. Yep. So tonight's webinar is just going to be basically chart reviews, and I want to take some of your questions as far as what's going on with your trades, how you doing, it's things, are things working, and so forth. So, anyways, before I start taking some of your questions, I could probably go through some of the ones that I took today, which were they're pretty straightforward. I take my own stuff at the morning. I make my own notes about what I want to play, and it's just because that's just the kind of trader that I am. Just want to find my own place. But I did have this Tesla on my watch. Here's how I picked this up. It was from last night, actually. I was looking at this one here. What was I looking at on the chart? The fact that it did break over this trend line over here, but it never actually came down to retest it. So I still feel like it has more to the downside here to come back and retest it. But the trade for today was right here. So basically, stock was opening underneath the close. Okay. Stock was opening, it was gapping down underneath the close of yesterday. So, what I was looking for is I was looking actually for a pop it open to short into. So, I had a trigger line at 254.50, which puts us right about there. And if you bring it out a few days, you'll see that it was just all up in resistance areas over here. There was a peak once over here, and even further out, you'll see that that line came into effect quite a bunch of times as resistance or support or what have you. So the way that I was playing it was pop it open, stock gapping down, pop it open, and I was going to short it. So I actually had an order in at 254.50, and that's when I went short. 254.50. I got filled in the first candle over here. So I was already short at 254.50, and at that point I just kind of hung out with it. I didn't feel like it was going to go over this range. That was kind of like where my mental stops were at that point. So once it started coming back into the trade here, I instantly put stop over this previous candle because that was it, and trade really just kind of pulled on me. I kept some of it into actually all the way through here, all the way into this part of the day. And on this big candle, it popped and it stopped me out the remainder. Then obviously it popped just to pull more, and got me out of the trade. What's up, Manny? So that was a Tesla. That was beautiful, and nobody was really looking at it. So it was kind of a fun one to play. And I'll tell you what. Part of the mentality on this one was the fact that the market was gapping down, and I figured that, hey, look, Tesla is kind of one of those that moves with the market. So if the market was gonna continue being red, then this would be something that I definitely want to play. I wasn't thinking much of Netflix or any of the other guys, just because I knew Facebook had earnings, so they would have their own sort of composition today. And Netflix been kind of really flat and not really playing along with the market, but Tesla have been. So that was my mentality on Tesla. Totally nailed that one. I also did DWTI. Now I kind of really had control of the way that the trade was working initially, but it got away from me. I wanted to go long here, and it really got away from me, and obviously big spike there. Totally missed out on it. Attempted to short a couple of times, and I did succeed, but never actually caught the entire move, which was quite a big one too. But it is what it is. Oh, this one I had written out, EXAM. Had this one all planned out. Now, I did not move one of my lines for the entire day. Look how that pinned up at the top to the penny. So that was supposed to be my short, and I never got it because I was looking at something else. But it pinned it to the penny. It was nice to see, but I didn't play it. eBay, I was supposed to play long out of the gate, but the candles over here were so sketchy, and I was actually looking for it to come all the way back up to the top here, then to grab that on the short side, and then fade it back, and it worked to perfection, yet I did not play one share of it today. All because at the get-go in pre-market, when I had the opportunity to go long, the candles were so sketchy and the volume was so thin. So after it popped right here, after hours, I had a feeling that it would want to go back to that area over here. But in between over here, I got caught up in the candles being sketchy and no volume was coming in. So I didn't play it. It obviously rushed right out of open, came all the way back up to that top, and then faded off, which was beautiful, but total miss right there. It was a nice setup, had it all perfectly planned out and everything. This SRPT right into close when we did this one here, I think was 11:33 long, and then it popped over a target was 12, and so it came all the way up to like 11:80, which was pretty cool. But I got out into, I think it was 11:60 something or something. I got all of my out. Obviously, when this chart came over the 50 EMA, the correct entry was here, and not because obviously the chart went up, but because the 50 EMA was your support at that point. I wasn't looking at this chart all day. I kind of only picked it up when I saw money coming into it, so it just wasn't. It's not fair, obviously, to say that I should have caught this. I wasn't looking at it. There's just too many things to be looking at all day to catch trades like that. So you just wanna play what you can play, and you can't force that, you know. Buffalo Wild Wings, I also had I know that this is kind of a Wall Street favorite, and I definitely wanted to play this on the long side right at open, and I did pick it up at the open into the pull, and then it just pulled a little bit lower, stopped me out, and then it just had a nice run right into it, but got out of that one also. There's some really nice setups that I was all over, and that I just totally missed, but it is what it is. I also played Solar City over here. Took it long, I think was 33.90 right here into this range right here. 33.90, got a nice pop, and I was out of that trade. Didn't even bother to look for a double top for a short, which was very silly, being that the double top was right here. I could have shorted it here too, so I think it was just a lot of misses on my part. Maybe, I don't know. There's no excuse. It was a lot of misses on my part. I did I did play Facebook after hours. I played the first exact pop. I shorted it at 117.50 right here. It pulled back down. I got 1.1 and something point. Yeah, I think I'm just tired. So I had a line worked out for Facebook in my on my charts, and so I was totally playing Facebook into the earnings, and that peak right there, 117.50, came from over here. So it popped straight up to 117.50. I shorted it and brought it down for like a point and something. Then I was out. I was done with that. So it was a quick little 1 point thing. I figured it would just hook and move afterwards because their earnings beat, which is going to be great for the market tomorrow, by the way. Speaking about the market tomorrow, we are just going to be talking today, so there's nothing like real structural going on. So don't feel like I'm just rambling on. Bullish engulfing. Chart still sitting on the 13 EMA here, so definitely be aware of this bullish engulfing here. Be aware of where the chart is breaking out, because it is a trend breakout over here. Your stochastics are setting up. They're about to cross over. Your MACD is not even hot or anything. Volume's coming in where it needs to come in. There's quite a bunch of indicators that are saying that this market is definitely headed higher. So watch for some of that. Watch for some of that push into tomorrow. Might even get all the way up to here. So I would say at least to 210.30, somewhere around there, but we'll see. But definitely, I think the market definitely pushes out into tomorrow a little bit. So, what do you guys have for me? How was your trading day? And what did you end up doing? Screen's a little sketchy tonight, I see that, but I think I'm just running a little too many programs, and it's just something I'm gonna have to deal with right now until I upgrade. Quick question. Figuring out what tickers are morning runners when the market opens. What type of candlestick setups indicate the day runner versus a candlestick pattern or House show reversal? Okay, first of all, how you figuring out what are morning runners? Okay, are you playing, Kathy, you playing gap up, gap down strategy at the mornings? Are you playing, just out of the gate what's moving strategy, like something that have not gapped up or gapped down? Because gap up and gap down strategy is a whole different thing from just a trade that's straight out of the gate moving. So is it something that was up or down and then you're trying to play it at open? Or is it something that's just moving? You guys can type. You guys can put in all the questions that you want. It's just going to be about you guys here. We can just chat. I felt like I know it's only been 1 week since I haven't done a webinar, which is weird because, sheesh, okay, which is weird because I haven't, it's only been 1 week since I missed a webinar. It feels like forever. Gap ups. Oh, Kathy, not sure if you've, in my YouTube section, I have a video on how to play gap up, gap downs. That could be very helpful to you. It'll probably answer all the questions that you get right now. And previous day runners. Okay, so that's a whole different thing. Previous day runners would be a continuation candle. So let's look at, for example, maybe Solar City. I don't know if that was a continuation candle. Let's see. Yeah, we can definitely call Solar City a continuation candle. Yeah, so, okay, this candle over here was running. And, Joel said it's in my... Okay, it's in... Damn it. I'm going to copy and paste this for Kathy here. There you go. That's the gap up, gap down. You have your YouTube up. Oh, that's fine. I was like, damn, Joel, you're pretty quick on that. Anyway, so continuation candle. So chart goes up that previous day. What I actually like to look for, Kathy, is I'm looking for a daily reason to come into this chart. Okay. So eventually that chart's gonna load for you guys, and we'll be able to see what I'm talking about. Okay. So bullish Harami over here. So we're looking for a continuation candle in the next day. The objective of a continuation candle is that it's got to be pointing in the continuation direction. So a candle that opens in between or underneath, that's not a continuation for the day after. It really wants, if you want to do a continuation on the bull side, obviously, it's got to be opening up close to the top or over the top of the candle for a continuation. So what I look for is a pullback into a range. Now, if I looked at this daily chart, right off the bat, and not because it pinned it today, but because this previous support over here is where I would look for. And I know that it's going to sound really fishy, but that's probably exactly where it came down to, which is pretty damn close to it, and then it actually popped off. But if I was just looking at this on the 5-minute chart anyways, I would see that there's tons of support here into this flat zone. And so that I would probably want the chart to come back and test this area here anyways for a continuation trade. Now if it broke that area, where would it probably support? It would have probably come back into this area here to find support off of this group over here and this group over here. So if I was to play this, I would look for a pullback to close to this line over here. Seeing that it hit that line pre-market, I would have probably actually gone long on this trade. If I was looking at it from the get-go, I'd probably have gone long right over the 50 EMA right there. And then I can have a solid risk to this low down here. Obviously, you would have never got close to getting stopped out. I would have gotten into the position at least if I was doing a 50 EMA support. Now, when I'm doing a 50 EMA support on something that I have a pretty tight risk on, I preferably most times go half size. Like, I'm not fishing too much here. I'm actually pretty sure that that's a decent support. And so I actually go about half size if I'm into a position like that. Now, the kicker is that you're trying to figure out where you want to start taking money. Into this area over here, which comes back into about right over here, is where I'm actually taking some of my money, right? So the chart pushes here, I'm actually taking some of my money into this obvious double top area. So I took half of my position. Say I took say I wanted 2,000 shares. So I took 500, I took 1,000 shares here. I sold 500 here. Once I sold 500 shares here, I put a stop at my entry for the very first second, at least just to make sure that I'm not gonna go red on the trade. It's obviously I'm putting it way deep down in this trade, but just say I did put it at entry and I'm holding it. Chart pushes up again. Now you gotta figure if you got in at 33 and your chart's pushing over 34, that's a pretty good win anyways, right? So what I would do is, because the chart didn't actually give an area here for, and I play 5 minutes, so for me it's a straight candle. The fact that the chart didn't give a support or anything, I did not add into the trade. What I did do was take 500 shares, but I still have 500 shares left. And the fact that it went straight up, and this big candle here would just be, for me, honestly, a sell. It wouldn't even be like oh, I'm gonna add into it, or I'm gonna wait for a bounce and then try to hang on to it. Something like this where I just instantly see a huge green stick. If I'm long, I'm out. You won't catch me into a big trade. Even when I traded it here at 33.90 long, I was out into this candle here, not knowing, not really caring even about the high of day or taking more of the trade or anything. I was out into this green stick here because it's just my way of trading. If I see a big green candle and I'm long, I'm out, because that's where it's most liquid. And then even if I'm not out the entire position, yeah, I always sell into big green candles. So there could be a big green stick anywhere in the chart, and if I'm long, I'm taking the money. And I'm always covering into big red sticks, because that's where most people are covering also. So in this case here, even if I went long, risking the bottom here, I'd sell half here, I'd end up getting out the other 500 here, and it'd just be a 1,000 share trade throughout without me even adding into the trade. So that would be a continuation trade. So in a continuation, you're looking for a pullback, basically a retrace of some of that gains from the previous day, and then you want to go long. Now on each chart, the gain is going to be different. Now I typically like about 50%. So I kind of deal with like a small mental Fibonacci type dealing, where I kind of look for that 50% retrace. But if there's strong support, as in this case over here, then I just deal with what I gotta deal with. You know, not all the time you're gonna get that deep pull back into it, because sometimes if a chart pulls back to a certain amount, you're thinking in your head, hey, I'm getting a great entry. But what you're not really realizing is that chart just broke. So instead of getting a great entry, you're playing on now a broken chart. So you have to be careful with the continuation trades when you're trying to locate them, get into them or whatever. Make sure that when you're getting into that continuation trade, it still is a continuation trade and not now a broken chart that you're playing. You understand what I'm saying, Kathy? So it could be a complete big miss where you're thinking, holy crap, I'm getting such a good deal because it is a continuation trade. But without realizing it, now you just got into what is a short trade because the chart actually broke. So be careful in your continuation trades, because you don't want them to pull back so much where you're actually in a bad trade now. Okay? Like if, say, this chart broke all of these areas of support here, and it came down here, 50% of this day's move would be awesome to get into. But what you actually just played yourself into is a broken chart now, because it just defeated all of the great support that it had. So the way that I like to play continuation trades is a small pullback, but it has to be a pullback into support. If it's not pulling back into anything supportive, if it's breaking strong support such as this area here, that pullback is too strong for you to try to play for a continuation. So just leave the chart alone and play something else. because if it pulls through a support like this area here, like this zone, I would call this like a power zone right here. If it pulls through this power zone here, oh, that is just, it's horrible for that chart, because then now that just became strong resistance for your chart. So be careful how much it pulls back into. Today on FTNT, okay, let's look at the chart. Okay, FTNT. Okay, eventually the lows. I really messed up. After the first candle open, when market opened, a second one when it was at the bottom. First candle open, pull it open. Okay. I thought it might have bottomed out and start curling up. Okay. Where did I go wrong? Are you using what time frame are you using? So that I could kind of understand what you were seeing when you were seeing it. If I'm looking at 5 and you're looking at 3 or 2 or 1, it's a big difference, right? Five. Okay, so we're on the same time frame. Stock gapping up. Okay. Your first signal that this trade was gonna give back some of its move here, and I brought my volume bar all the way up so you can see this, is the volume. This volume here is a big dead giveaway that it was gonna give back some or a lot of that actual move, right? So before the market even opened, you should understand that look at these volume here, look at this volume here. So right off the bat you're saying, wow, that's a pretty big gap up, but all it is right now is a pretty big gap up. Okay. So that being said, I'm thinking right off the bat in my head this chart's gonna give back a lot, okay? Now, even if I was looking at this, let me look at it a few days out to try to figure out where I would have gone. Okay, so I would have pinned trend lines in this area here. Being that I pinned there once, pinned there twice, hit there 3 times right here, I would have actually looked for a support in this area. I probably, honestly, would have missed this entire long. Because my trend line would have been all the way down here. Trends just got messed up because I changed time frame there. But as you can see in the 5 minute out of few days, my trend would have actually been sitting somewhere around here. I would have actually missed this entire trade. So let's see what you did. Okay, so candle pulls. After you saw first large from yesterday post market during trading calls, should I have used that candle to establish support? Which really kind of puts you in a weird area because it was like such a big stick. Okay. Let me just try to really understand what you said. After the first candle completed, which was this one here, on the second candle, when it was way at the bottom, I thought it have made bottom out and start to curl up. So you went long into the second candle here. And then you got stopped out. Where did you get stopped out, by the way? Because I'm totally feeling where you went long. I just want to know where you got stopped out, because that's a big difference. Okay. The reason why you went long was because the stock gapping up, pulled it open. You bought down here at $33.16 long, which is absolutely perfect entry. Stock opened above the previous candle. You pulled back into the green candle. You bought nice and long here. Perfect entry if this was gonna stay long. Did you get stopped out after it broke the bottom of this right here? Okay, then you did absolutely nothing wrong. If you played this candle, it opened above, pulled back into this candle without breaking it completely, and then you got stopped out in the previous candle, you did nothing wrong. Yeah, you played it fine. I mean, what you can see here is obviously a dark cloud cover, but the fact that the candle opened above and then pulled back to give you an entry, and you used the previous candle as at the bottom as your stop, you did nothing wrong. I mean, you didn't catch quite a big loss on it, but you did absolutely nothing wrong. It was just one of those charts that did that to you. My volume comments. Oh, thank you. Yeah, no, yeah, and you did absolutely nothing wrong. The chart just messed with you there, and that happens, honestly. How many charts have we all played that you played to perfection, where it's gapping up, it pulls, it gives you an entry, and then it pulls again, and it stops you out, and that's pretty much what happened. The stock gapped up, it didn't pop it open, it pulled it open, so giving you a long entry idea right off the bat. You took it, you put the stop at the bottom of the previous candle. You didn't lose a lot on the trade, but you still wanted to know why the hell didn't it work. And it's okay that you got stopped out. I commend you for getting stopped out there. That was a perfect trade, even though it was red for you. Absolutely perfect. You're on your way. Just sometimes that stuff happens, you know. You can't fight them all. But it was great. I would never have played that any better. And your entry was, if that chart had moved up to the upside, that entry was like the possible best entry you could have gotten. Really, it was just a clean entry right there. Honestly. Well done. I mean, well done with the entry, well done with the stops. The trade didn't work. I don't care about the trade not working. The fact that you took it, what's up, Ryan? The fact that you took that trade, the fact that you had the stops right there, the fact that you understood what you were getting into, I totally love that. I love it. The fact that it went red, who cares? Honestly, I'm okay with you losing a little bit on that, and I'll be open with you about that, because that's a perfect setup. Honestly. Okay, next question. Keep them coming, guys. We're here to learn something, eventually. Tell me about your trades, tell me what you did. Tell me what you did right. Tell me what you did wrong. I got stuff that I did wrong today too. But it is what it is. What did I play that was really bad? Oh, you know what I played today? Oh, you guys would love this. Dan, you don't have to send into you could send into general chat. I think that's the first ticker you could send there, but CRUS, I'll look at it for you right now. Tell me what you did and how you played it. I would love to know. CRUS is right there. Let's see what you did and how you played it. Okay. Ah, there we go. Now we're getting some questions. Love it. Played the bull flag breakout formation. That was right here. So you played it on the long side. Okay. So let me just ask you right off the bat, did you do one of these trends? Like that? Okay. No, it was around 3. Okay, so that's right around, that's 1. That's 2. Oh wow, that was all the way up here. Okay. I did. Wasn't it this flag here that I was playing? Right. So you played this one into the flag break. Did you risk the 50? And it worked, right? I'm pretty sure it worked. Okay. So you're just happy about the trade that you took. And do you want to know why I went long, or why I was seeing it? When I saw it at that point, I remember talking about the chart. When I saw it at that point, it was here, right there. Are we in? Yeah, we're on the same page again. Okay. Yep, it was that point right there when it broke, and the risk was only to the 13 EMA. Yep, totally worked. It did go up to the high. It actually broke out the high. How long did you stay into the trade? All the way to the top? Did you get all of it? because it was a pretty clean cut trade, and the risk was only to the 13, I think, at that point. Yep, nice. So you stuck it out. Nice little break. You know what the thing is that it's some of should I ignore level 2 on these trades? I wouldn't say ignore it. Look, if the volume's dead, you don't want it at all. But at this point of the trade, when it broke out, the volume was relatively higher than the last couple hours of trading. So at that point, it's not that you're ignoring it. The volume did start coming in. So at that point, you could have said, "Hey, look, the volume is relatively higher, and your volume indicator was actually starting to curl up just a little bit." Now that's just the volume. If you were looking at your MACD, you could see that it started to curl up also. If you were looking at your stochastics, obviously that's all big, so you can't see the stochastics. Okay. If you were looking at your stochastics around the same time, you would see that it was also curling up. So you were good as far as when I put out an idea, it's because I've already looked at these aspects of it. If I'm saying that, hey, I like CRUS long here with the stop risk in the 13 EMA, obviously you guys know that I'm trading on the 5-minute chart. So if I put out an alert that says, hey, I like this here, risk the 13 EMA, you already know that I'm looking at a 5-minute chart. So instantly you should say, okay, well, if I'm not on a 5-minute, I should put on a 5-minute real quick, see what he's seeing. And then, I mean, Dan took it, and it totally worked for him. Got him a nice little trade right into close. And when I do put out an alert, it's because I've already kind of visualized a lot of this stuff here too. So I mean, I could put out 150 trade ideas per the day, but it wouldn't make sense. It would just be me popping stuff up. I put it out when I see something really nice, like with the Solar City, into that trade right there into the end. That was it was beautiful. Right here at the 33.90, the break, the entry, the pop, everything was just perfect. So when I put out something, it's because it's already setting up. It's not because I feel like typing stuff or I'm bored. How many people? Yeah, individuals, and the Skype Academy is 5 per week. Yep, 5 per week. Now we're doing pretty good. We're actually the couple people that are in there this week, they're having a lot of fun. We're just learning so much stuff. So it's not so much as just banking money. It's more about it's more for me about learning so that you can bank your own money. Tracker was in there on the first week, on the second week or first week, and he's doing great. And I'm trying to keep up with some of the people that were in there, you know, making sure they're okay and stuff. But my email box is getting a little bit packed, so I'm a little behind in replying to everybody. Okay, how does Labu look continue to go down based on the daily? Okay, I'll go to that in a second. Alright, let me get to that. Labu, how does it look on a daily? How did it feel today when the market was going up and Labu wasn't really strengthening as much? It didn't feel great. Biotech on the whole was kind of weakening out. Now, I could tell you without looking at this daily chart at all, that at the end of the day, there were buyers coming into some of the big name bios. ICPT, Blue, forgot some of the other big names, but there were big names coming into some biotechs late in the day, giving me a signal, and that's pretty much what I'm looking at there. A possible doji right at the bottom, still closed under the 50 EMA, totally understand that, and that's okay for now. It all depends on this candle open tomorrow. If the candle opens underneath tomorrow, look for a pop, and then it's gonna pull. If the candle opens on top, what you could have here is you could have an abandoned baby type formation, which serves for a pretty aggressive move to the upside. So so as far as Manny, as far as playing Labu tomorrow, a must watch for the open candle. So the chart must open above here. So what I'm saying is, obviously the chart closed here. That line there, the opening price of tomorrow has to open above that line. Okay, it's obviously setting up to open above that line. So not saying that it's gonna stay there, you know, we still have pre-market. So if the chart actually pulls back to test that line tomorrow at 33, you can take it because you have support in this range here. What I would love for the chart to actually do tomorrow, and that coincides with that trend, so 33 is a good marker for that one tomorrow, Manny. So if the chart pulls to 33 and holds, you can go long on that. Okay, so you write that down. MUR. Okay, let's see how you played this. You played MUR short and long. Okay, and you did both on green, but you got out too early. Okay. Now CW, you definitely gotta let me know what you did. You played long out of the gate, or in between these pops, or what you did. Because apparently you made money on the trade. I just want to see how and where you did. You shorted at 36.29. Wow. Okay. Beautiful. Wow. How'd you manage to find that? Was it just candlesticks, or that's a pretty nice short entry area? Stock gapping up, popped out of open. Wow, 36.29. Wow. Okay. You covered at 35.50. You did not want to let it drop below the 50 EMA. You did good. You started at $36.29. You pulled through the 8, through the 13. This is where you could have added into the position right here. When it pulled through, when it popped back to retest and didn't break it, you could have added full position into the trade here. Would have given you an entry. You'd have 36.29 plus somewhere around here about 35.88, somewhere around there. Your average would have put you right about smack dab in the middle here. And then you could have put stops at entry for a full size position, and your stop where you covered at $35.50 was perfect. You didn't do anything wrong there in that cover. So that aspect of it, as far as the short, perfection. I mean, you nailed that top, really. I mean, did you play this one with candles, or because that was perfect? There was no like lines or anything. Wow, beautiful. Topping candle. Rejection, rejection. Wow, that was a perfect entry, by the way. And yeah, the only thing that you didn't do was add into the trade. That's the only thing you didn't do. So next time when it comes through moving averages like this, it pulled through, it didn't do anything, it pulled through, and it closed under. Now that's your signal that, hey, I'm gonna add into the trade. So you wait for it to pop, to retest into this area here, and then you add into the position and bring it down. Now your target is instantly here, and it's got to instantly be here because that's a 50 EMA. Now here's how I would play it, and I would have actually, I don't know if it would have worked out better. Okay, say I got the same short as you, say I added here, say I had an average right over here into this zone here. So my stops, my average, everything right there, right? Comes down into this zone. I'm taking like 3/4 of my trade out here, because remember now I got full size, right? So I'm taking about 3/4 out of my position here because I'm expecting support over here. It pulls through, it finds a support, and then that next candle starts going up. I'm covering into this candle here, so I'm actually losing a little bit going back up because I've covered some here, but I'm holding some for the what if, and the what if didn't happen. So once these candles started to push up, I would be out of the trade into this area here, which would have actually, you know, I probably would have had stops all the way up here, honestly, over the 13 EMA. So I probably would have gotten stop out all the way here on the remainder. So not sure if it would have worked out, financially, you know, adding in here and covering here with the full size, and then allowing the little bit to come back up till here. Probably would have ended up making about the same. I don't know, maybe a little bit more because I added, but the cover that you did, perfection, honestly. And you went long where? You said you played it both ways. The only thing you didn't do on that trade was add. And you just forgot about it, and it's okay. You get excited when you're making money. It's okay. You went long on the trade also. You went long at 35.72 later in the afternoon. So somewhere around here off the 50 EMA. 813 cross right here. Wow. Dude, why are you complaining? Where did you take money? Or this one, maybe you took this one a little early. I have a feeling. 36. So you went long at 35.72, which puts you right about here, and then you got out at 36. Not a bad one again. Bearish engulfing here. No reason not to get out. It's okay. You didn't leave that much anyways. Remember, you had a $35.72, right? Let me draw a line for you where $35.72 is. $35.72, right there. So that was your entry, that yellow line, $35.72. You took all your money at $36. Bearish engulfing up top here, pull back all the way. Would you have actually let that 25 cents come all the way back down where you're only 5 cents up? Probably not anyways, right? So you did great, honestly. The trade, look, not every trade that you take is gonna go, incredibly great in your way. Sometimes the trade has a range. If you look at this entire trade, it has a $1.37 that it went up for the entire day. Being that you're taking increments of about 50 cents or so, it's really good, honestly, because you have to look at the range of the trade that you're dealing with. It's not like a DWTI moving 25 points in a day where you're unhappy that you only got 3 points. But you have to look at the range of the trade that you're dealing with, and I think you did this one to perfection, honestly. No complaints in my book. You took that money right into that there. Huge rejection candle, bearish engulfing. There's no need for you to be in this trade even past this candle here. So you got in here at the 813 cross. Beautiful. Got out there. No complaints. Two perfect trades, buddy. You just you don't expect too much more out of yourself. It's really thank you very much, CW. Thank you so much. But that was perfect. Fine. And maybe you didn't get the whole big move. Maybe you thought it was gonna end up going back to this high up here at 36.50. So it's fine. It's fine. What you did here was perfect. Not every trade is gonna get you the big moves. But as far as looking at it tomorrow, daily chart, chart's extended. Okay. Keep that in mind. Chart's gone from 25 to 36. So what you're going to be looking for in this one is if it pops tomorrow, you want to be short biased. Why? Because they already had their good stuff. All right, that's their good stuff right here today. So what you're going to be looking for in this chart tomorrow is if it pops to that area right here, you're going to be looking for a clean double top. If you miss the double top, I mean, my auto trend is picking up a trend and it's putting you into a 3660 range. So into this 3650, 3660, that's your power zone right there. So watch for any rejection candles tomorrow in this range here. Now if you get the play tomorrow and it does pull, it's going to pull lower than this here, because the sellers are going to come in now and take some of that 10 points that they've been playing with since 25. So you can definitely play this one tomorrow, but if you have to wait to see if you get that quick rejection up in the top. And if you get into that short power zone area, you want to take the short over there and then hang on to it, because if it breaks through this low area right here, you add into the position because it's going to actually pull deeper. So you watch for it. If it continues to the upside, that means that it has to pull down into this area here. So in order for you to go long, it has to pull down into this 35.50 area. In order for you to go short, it has to go up into this 36.50 area. So definitely keep an eye on it. It's got a nice range, but remember, if that's 35, if that's 36, that's 35, you're only 1 point, right? So you divide that in 2 is 50 cents. So what you're actually trying to take home is 25 to 30 cents on a trade in this particular chart. So don't overshoot for too much. If it's not a big trade mover, it's not a mover. It's okay. You have to play with the range that it's giving you. Okay, Kathy. Yeah, we did that. How much control do MMs have on setting up chart patterns? And if they do have control, are they intentionally setting up patterns to scare traders off before? Oh, like trapping? Yeah, you see, that's interesting because sometimes you'll get fake breakouts, and for me, using a 5 minute candle really kind of controls where a fake breakout is as compared to a person using a 1 minute. Because a person using a 1 minute would get a candle that goes through, a candle that makes a support, a couple candles that make supports. Before my 5 minute candle even closes. But if my 5 minute candle goes through a support area and pulls right back through it, then I knew for sure that it was never a support to begin with. So that's why I always tell people when they're getting into a trade, especially on a breakout or some sort of thing like that, make sure that that other candle forms, closes above that area, and then supports on that area. I'd rather you miss 10 cents on a long side than get in 10 cents earlier thinking it's a breakout and it turns out to be a false breakout. But how important are the MMs in something like that? You know what? They're there. There are algo programs that seek things out like that, um, and that there are actually programs that do that. So, and they're much faster than you are. They're much faster than you can when we all are together. So, in order to get around that, you're gonna have to, when you see breakouts, I prefer if you get in later in the trade. Like say for example, let's take a little drawing. Okay, say for example that's your trend, right? This is your one candle that came above it. Now if you had 1 minute candles, you'd probably have a lot of these little ones in between here and there, okay? If you had a trend like that and you had a 5 minute candle, it would go like that. And before these 1 minute candles, the person that took the 1 minute candle here long, being that he saw all this little support here, thinking that it's gonna go long, but you with the 5 minute candle got another candle that came straight back in here and you never got into the trade because you're using a 5 minute candle and it negated all of the small stuff over here. The guy that came in here thinking, oh, I found support, take a long position over here thinking it's gonna go here, and it went this way instead. So this guy with a smaller time frame, in this case, I'm not saying in all the cases, in this case got faked out because his candle time frame was a little smaller. You never got a full candle to close. Now, when your candle eventually comes back over again, you're watching it again. But this time, it pulls back and it holds support, okay? I only want you to get into the trade after it crosses this previous area here. I only want you to get into this trade after it crosses this area here. Not when it comes back and it holds here even. Because the fake breakout already showed you that it was fake. So now that it's supported over here, I'd rather you get in here. Sure, you missed this money from here to here, but the trade can actually go way, way further out. So in a situation like that, this guy lost money already, not even probably trying to take this trade again. You saw the setup, and you waited, and you waited, and then you got in here. I think this is your entry here. And this is not a target anymore, by the way. That gets negated, because that was fake to begin with, right? It was a fake pop, it was a fake pull. But once you get into this area over here now, that's where your money's coming in. And then you'll chart it, based on what else is going on. After that, you can add into the position or whatnot. But once you get in over here now, remember that whatever trend line that it broke now becomes your support, okay? And that's how you'll play that. So just remember that though. On a bigger time frame, you have the less likelihood of getting stopped out. Sure, you may be a few cents late to the party. I'd rather be a few cents late than being this guy here, red. So you took into a green trade, and this guy over here, maybe he didn't lose a lot, but he did lose. And what he lost in the trade also, he lost faith in his formation, he lost confidence in his trade, and he probably didn't come back into the trade to see whatever you're getting now. So just a big difference in how you perceive the bigger picture of the trade itself. And for me, look, I'm not saying that it doesn't work. If I'm doing a parabolic, or if I'm doing an IPO or something, I'm only doing 1 minute, and that's just because I need to see the exact candles. But in a case where you're just day trading, I prefer to use the bigger time frames. It just kind of helps me out better. Not everybody's into it, but that's the way I see it. So hopefully that could help you out there, Kathy. Is the risk on the 50 or the flag? In your situation, Dan, is the risk on the 50 or the flag on CRUS? Was it that one or was it MUR? When you took the trade here at 35.72, was it? Yeah, okay. The risk was to the 50. That had to be the 50. It's nothing else anyways. I mean, there was nothing else. There was just all your supports are right here. All your supports are right there. So the risk was in that zone, you know. So it's a zone thing really when you're doing the risk. You know, like don't get so caught up. And I I I I sometimes feel like traders and not look, I am very precise in where I want things. If it comes down to the penny where I want it, then I'll take it. Sometimes I'll miss an entire move because I'm searching for that 2 cent to the entry that I really wanted it. That's me. A support, resistance, all that kind of area, that's a zone, okay? That's never an exact pinpoint. When sometimes you hit a double bottom and you nail a double bottom, it's great, okay? When a trade came down like this, now let's see why this trade came back and hit here. How important is your opening range when you start trading? This is called your opening range here, okay? Keep this in mind. This is your opening range, your first couple minutes of the trade, of the trading day. This gives you a range of how far the trade actually has on the upside, has on the downside. If you follow these ranges throughout your day, you will see how important they are. The trades kinda always are in there. Now that's that chart. Let's do another chart. Opening range would be from here to here. See how that chart's just in there? In range, right? Opening range here to here. Charts in that range. Opening range is a very important thing, and it can really define how your trades work or how you see the rest of the day in that trade, or how you play the breakouts. For example, like you see this was opening range here from there to there, right? See when it came over how that opening range became support for a move to the upside. I mean, you can go through any of the charts and you can see how opening range, see when this opening range broke out, how effective it worked in this case. Sure, some charts may work like that, but obviously not all of them. Opening range for a lot of stuff. I mean, I showed it that one. The opening range was actually pretty extensive from here to all the way here, but you can see in this bottom of the opening range how much resistance it actually proved to be for the entire rest of the day, even into after hours over here. So your opening range is not gonna give you a precise entry or exit, but it's gonna give you a breakout range for either your shorts or your longs, or hey, this chart has now a range of from this range to this range. So if it's giving you from 252 to 255, you know that you have a 3-point range in between. So if you divide that by 2, it's $1.50. So what are you trying to take home? 75 cents. So in an opening range trade like this, you're gonna kinda have a grasp of what parameters you're about to take home, what areas should be broken out completely, what your support zones are. It really expresses a lot about a trade. So keep that in mind tomorrow. Watch like maybe 3 or 4 candles. Yep, 50 cents. Yep. And Terry starts taking 50 cents increments for profits no matter what the range is. So, and I've seen him done this many times. 50 cents, he puts that in his pocket, and no matter if the chart goes $50 after that, at least he took 50 cents in his pocket first. And I've seen this many times firsthand. Yeah, so just keep in mind how important opening range is. Alright, it's I know we never really went over that. So that's probably something kind of new that you just think, oh wow, that's kind of cool. but opening range is important. It kind of depicts a lot of the move for the entire day. When a chart breaks opening range either to the upside or the downside, watch for continuation. See, like over here how this chart broke? 5-minute candle, right? Pushed through, pulled back right into it, fake opening range breakdown. See that right there? A 1-minute guy just went short here because the candle closed underneath. So it's the exact same thing like I was showing you, Kathy, with the trend line break. A 1-minute guy is short over here, probably full size because it broke low of day. And so he's thinking now it's gonna flush. You 5-minute, you're in. Oh, I'm not in because it was a fake breakout. 1-minute guy just lost a bunch of money. So just be careful. Opening range on RESN. That was a little choppy right at the beginning. I got into this one long too, volume spike and everything, but it didn't happen. Opening range for this one would have been here to here in that channel, right there. I got in. I took RESN long today, and it failed. So I mean, it broke out of range and everything. Yeah, had a nice open, decent volume came in when it should have right here, and it broke out and everything, and then came right back into range. Now notice how that bottom of that range acted as resistance all the way through the day. Like you didn't even realize it had so much effect on your entire day, but it does. And I'm not saying that it's going to be exact every single time, but remember, the more tools you can have in that toolbox is better you're going to be as a trader. So just be like, hey, I can't find a support, or like I don't know where this should go. Just pop in an opening range kind of trend, and see, get yourself an average of your risk, your reward, your support, your resistance, that sort of stuff. It'll help a lot. It'll help a lot. And you'll see them as you go along in any single chart that you pick up. You'll see where the opening range breaks out, where the opening range holds as support. That's opening range there. Obviously it didn't go break down for a short, but you can see how opening range here held for a long in this case. So I mean, I really, any single chart that you pull up, you'll find a specific area for an opening range, and then you'll see when that opening range breaks. Look at this one. This cannot be perfect, more perfect here. That's your range. You see how the chart stayed in here? Just hung out in the range, hung out in the range, hung out in the range. Look at these fake candles over here. You see that fake breakout? If you're a 1-minute guy, you're long over here, full size too, because it broke high of day. Got stopped out, lost money. Okay, over here, even if it came down here and you went short on this chart, and you had stops even into the range itself, even, you'd still be short into the position, and you'd see how important your opening range actually worked for a 6 short. I usually give it, you know what, I don't have a specific time, I just like a grouping. I honestly like about, well, I do 5-minute candles, right? So each candle is 5 minutes. So, and I don't use it for like precise things, honestly, but I do like to keep it up for some sort of like like a big breakout type trade, like something like this, like on a short side, you know. It has to be for me at least 3 or 4 candles. So that's 20 minutes, about 3 or 4 candles, somewhere around there. At least where I can get a sort of a range of where the chart is. Opening range is exactly what it is. It's an opening range. It's a range where it's saying, hey, this is my top, this is my bottom. You figure it out till we figure it out together, and then you get something like that, you know. And I do 5 minutes, right? So, right. So that's like 25 minutes. But remember, this is not something that you're saying, oh, I'm waiting for the opening range. I'm going to wait 25 minutes for 5 candles to print, then I'm going to trade. It's not for that. It's for you to just say in the back of your head, hey, look, midday, nothing's going on here. I'm going to plug these opening ranges in here and see if this chart breaks out to the upside or see if this chart breaks down to the downside. And you never know, right? It could just be something else that just gets you a big hit. And that's how I kind of play that opening range. So it's not really something that I'm sitting there going, hey, I'm going to specifically play this, but it's definitely something that a lot of traders don't even show you, or a lot of traders don't even know that how important the actual opening range is. You bring that opening range out, and you'll probably see that it actually, look, you bring that out a few days, if you bring that out a few days, you see that opening range here from today, look how effective it is as far as support and resistances, even back here. Even all the way back. All the way back. Look, it even tagged there to a penny. All the way back. Support there. And I'm sure that if you bring it back way further out, it'll probably have support or resistances somewhere else in the chart. But look at opening range from today has so much effect on time periods before. So it's pretty important. And that's obviously not, this is not even a chart that I looked at as far as opening range today. I traded it, but it's not even something that I looked at for opening range. Yeah, for block buyers, 500k is the only thing that I'm really focused on. And 500k doesn't apply for ETF blocks, because ETF blocks trades a lot more. So 500k is just for regular stocks. That's where my block scanner starts picking up stuff. And for ETFs, it's actually at 1 million, because I have to see a real block there. Like when Seadrill and stuff is printing, like big numbers like that, that's what I'm really interested in. So those are the kind of blocks I look for in ETFs. Like my ETF blocks are different from my regular stock blocks. Okay, I want to answer this question in ticker. How did the new Trade Ideas scanners work out today? Well, I just spoke to the Trade Ideas guide today, and I got set up with the link and everything to be the affiliate. So I guess now when people go in and if they sign up through me, you actually get a pretty nice discount, honestly, with that promo code. It's a pretty nice discount. So if you're interested, let me know, because it's a pretty interesting discount. I didn't think it was that much, but pretty cool. And every week they change the code, so if whenever you're ready, whoever's ready to check it out, at least give it a shot. It's pretty nice. They have a lot of stuff, and I'm going to try to learn more stuff about them. I currently use Trade Ideas with Scottrade, but being that Trade Ideas themselves reached out to me, they're actually giving me Trade Ideas Pro for a year through them. So I just canceled my Scottrade one today, because it makes no sense having Scottrade one when they're giving me that one for free. So that's what I'm using now. I just linked to SureTrader account with TradeStation. Oh, so it worked. Kim, nice. Did you sign up for it today, Kim? The Trade Ideas? Or is this something that you had? Yeah. Oh, nice. So Kim did it. Beautiful. Beautiful. Kim and I shorted Facebook for a point and something after hours. She's in my Skype. And so we were just hanging out, and then we're like, oh, Facebook's up. Okay, fine. So we just shorted at 117.50. Yes, it was a little stressful. For you, it was stressful, yes. For me, it was pretty clean. She couldn't cover in time. I mean, she got out with, she made a point in something, but something was wrong with her buttons or something. It just wasn't going through. So she was pretty aggravated. Yep. So whatever I click, like if I use Trade Ideas, let me see, Trade Ideas Pro. Let's see. So if I bring across the Trade Ideas Pro, let me see if it'll. No, it's not even linked. So I put my thing over there and then hit Shift, and it's supposed to. Where did it go? It's supposed to link. Let me see if it links. If I put it over there and then I hit Shift. Right now, yeah. How do I link it? Damn it! I forgot how to link it. Fun times. Oh, I remember. New something. Tools, external linking, link it to Scott. Okay, so it should be linked there. Yeah, there it is. So now it's linked. But it's every time I double click on them, and then it comes into my system. So it's pretty cool. I mean, linking it is fun, and this is one of Trade Ideas scanners. So this is one that I use. This is actually the artificial intelligence one, which is pretty cool. It's actually a really nice feature. It's a little expensive on Trade Ideas, but it's an awesome feature. It calculates so many things at the same time, and it gives you the entry, it gives you an area for a stop, it gives you a target price, and this is the entire day, and this is the only ones that the Trade Ideas artificial intelligence put out. So they do put out really nice nice ideas, but I've been playing with them a little bit more, but I'm also just kind of focusing on my own scanners too, so I'm always making new scanners. Um, I know. QRVO. Let me take a look at your QRVO. Yes, I saw you playing that. QRVO. Oh wow. Nail that bottom, fill the entire gap. Isn't it crazy how this gap down, fill the entire gap to the upside, gap down, fill the entire gap back to the downside, then pushed up and fill the entire gap back up to the upside. Almost like this entire thing didn't happen. This was just pure money making right here. Insane. Yes, TY. Are you signed up for the classes? Because once you're in there, you get to see my scanners. I mean, seeing them live is beautiful. Colors are all over the place. And I'll show you how to set up basic ones. Yep. I went through some of that stuff today with the people that are in there today. So they set up, and Kim already signed up for Trade Ideas. Kim, did you use the link that I sent? Did it work? Not even sure. I mean, they just gave it to me. I didn't try it out or anything. I didn't even click it to see if it went anywhere. Did it go straight? Oh, okay, cool, so it worked. Alrighty, good job. Yeah, this is beautiful though. In and out. Wow. This is just unranged too. I mean, imagine you just went long out of the open. Wow. Then short it, then long it. Insane. Insane. This is a gift right here, and this is kind of stuff where you go, how the hell did I miss that? I mean, straight up, shooting star, short it. Wow. Insane. SWKS. Traded this one today. Oh my goodness gracious. Skyworks. That's beautiful. Wow. Fill the whole thing. Pulled back. Fill the whole thing again. Insane. Almost like it never happened. What about these guys over here that were long, right? And then they covered here because obviously they were losing a lot of money. Only to see this. Wow. Talk about heartbreak. That's a bad it's a bad one right there. That'll make you broke and then like suicidal in a few hours. Insane. So what else you guys got? Do I depend on slow stochastic or just candles? Every single thing. And this is fast. Everything. From the candlesticks to my trends to my formations, moving averages, volume, MACD, L2. There's probably not one area that I don't cover, honestly. The only thing I'm not really great at is reading news. I don't care to read filings and crap like that. I just like to see the main headlines. I don't do news, you know that. I do volume. And for me, price always precedes action. So I'm a price action kind of trader, and that's just me. That doesn't have to be everybody else, you know. But the Trade Idea scanners give you that opportunity to be a price action trader, and you'll see a lot of stuff popping up on there once you start playing with it. Because trust me, there's tons of stuff to play with. You'll be busy playing with that for a while. I used to spend hours and hours and hours back testing stuff, just hours back testing stuff. So you'll have a lot of fun playing with it. There's so much different strategies that you could put in. You'll be all over the place with that. So yeah. Do I use all the stochastics to get into the trade? No, 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 no. To get into my trade, what I'm looking for is, especially on a gap up, gap down, is like a retracement type deal. Moving averages and formations. These indicators tell me when I don't want to get into a trade. If just say for instance this pulled all the way down, but my indicators were still all the way up top, I would preferably, like, say there was still spiking like that way. I wouldn't really say, well, I want to go long, because I would feel like, okay, it still has more downside to come down after this curls down. But being that these were curling down already, I still probably maybe would have taken it off the 50. That would have been like the sort of the 50 EMA has really become a staple for me. I have used, and I do use a lot of strategies, 813 EMA strategy and everything, but the 50 has become a real staple in as far as my supports and resistances and where I take profits and where I add into trades, etc. So, like, the 50 for me has become pretty important. Now, you can trade purely off the 50. If I took all the other moving averages off, and you just traded purely off the 50 EMA, it wouldn't be that bad, because you'd go long if it goes over, obviously, if it puts a decent candle above. I would like to see more of a candle that closes over above, and then you'd go short if it breaks under and closes under. Sure, you may miss some. You would have gotten stopped out here. You would have went long here, so you'd have made money here, stopped out on the short side over here. I mean, that one's a kind of flat trade, so let's say UVXY. If you went long over here, you would have caught some there. Probably didn't even catch much. Probably got stopped out. Went short, came into nice. Went long, got stopped out. When it came back under, you went short though. That one totally worked. So if you did play like the 50 EMA alone, there's tons and tons and tons of different ways to trade. You can trade purely off moving averages. You can trade purely off candlesticks. Anything, guys. There's so many different ways to trade. You just gotta pick something. If you like formations, stick with that. If you looked at some of my journals from the past, you'll probably only see flag breaks, flag breaks, flag breaks, flag breaks. And now you'll see an assortment of different things like head and shoulders, or flag breaks, moving average crossovers, just random things, but you'll see an assortment of different things. But at the beginning, you would have just seen flag breaks. Almost every trade was a flag break. It was the simplest trade to take, honestly. You wait for that. If you can only go long, for example, you trade obviously something that has a nice pop at the open. In a situation like Tesla, didn't happen. It'll be a forced break. It never happened for you. So there was never an actual breakout. So say you did play something that popped out of the open. I don't know. What the hell? I don't know. That didn't even work. You want to get something when you're playing a flag break that's kind of bullish. Okay, so for example, you did this one. Not a huge, great example of it, but that would be a flag break, and that would be an entry risk in the low of day. That's a pretty tight window, so it would definitely have to be a nicer trend or something. But you can totally play one specific way of trading, or you can have an array of them. But as a new trader, you can just stick to one thing. Wait for your setups, and let that be the key. All right, MK, take care. Yeah, I didn't realize it was after 10 already, so I'm gonna stop the recording on that end over there.